Good morning, guys, and Merry Christmas. Now, I'll be doing one more show on Monday when the stock market opens now. It's only going to be open till 1 o'clock in the afternoon. I'm waiting in anticipation. Now, I got a chart for you to look at here. And what we're looking at on this chart is we're looking at the green line, which is the Dow Jones over the last few years, going all the way back to 1984. And what does this remind you of? It almost looks like the bubble in Bitcoin before Bitcoin burst. And we know how low Bitcoin went. Now, if this bubble were to burst as bad as Bitcoin right now, the stock market would go down to 10,000. It's not going to burst that bad. Not as bad as Bitcoin. Bitcoin burst is much bigger. But this market's going to burst. It's in the process of bursting right now. The bubble's bursting right now. And I'm going to tell you what. That first red line there on the chart, it shows 20,000. Now, this is an all-important, it's a psychological level, it's all-important because this is when the real fear is going to come in. They're going to realize that this is not a correction. And even at this point right now, they're starting to realize that this is more than a correction. Now, Monday is very important, what the stock market does Monday. I'll tell you, I'm half expecting a little bit of a rally on Monday. Not a big rally, but a small rally on Monday. And then everybody's going to go away for Christmas. That's half what I'm expecting. But if we get a major drop on Monday, it's just going to make more fear come in. And the more fear you get, the more the market's going to fall. Because it was ready to fall, you know. So what we got here, coming into the new year, I'm expecting the market to fall, even if we do get a rally on Monday. So I'm going to be watching very careful because this tells me about the energy that's in the market. What happens on Monday, whether we get a fall or we get a little bit of a rally. It tells me a lot. Okay, so I'm going to be watching very carefully what happens on Monday. Now I'm going to tell you what this red line means for gold. You guys at Gold Bugs, you've been waiting a long time for gold to do something. And it's been stagnant. You have to understand something, that the ultimate safe haven asset is gold. Right now they're rushing into treasury bonds. If that same amount of energy had rushed into gold that rushed into treasury bonds over the last month or so, we would have seen gold prices right now of like $1,500 or $1,400 an ounce. Maybe even more, maybe $1,600 an ounce. I'm going to tell you what, the energy is going to come into gold when we go past that red line. Okay? The energy is going to start to come to gold. I think it's going to be a little bit slow at first, but I think gold's going to remain fairly solid in its price increases once we pass that red line. Now, the green line is where I think that the Federal Reserve is going to relent. It's around 18,000. As soon as the Federal Reserve relents, several big things are going to happen. The first thing that's going to happen is the stock market's going to rebound. It's going to start to go up again. The Fed's going to be in the process of the back will be broken on the Fed, and they'll be actually trying to fix this crisis instead of create it. They'll start injecting money back into the system. It's very likely that they'll end all of their programs of quantitative tightening and lower interest rates back down. Start lowering interest rates, not just staying put, but try to lower the short-term rates. Now, what's going to happen is the dollar at that point, at that very point when the Fed turns things on the green line, that's when the U.S. dollar is going to start to decline. But it's not going to decline real fast at first. It's going to start a gradual decline. At the same time, you're going to see gold beneficiaries of this. Gold, silver is going to be a beneficiary. And cryptocurrency is going to be a beneficiary of this. It's going to be rocket fuel to the cryptocurrencies. And it's going to do really good for gold and silver too. And so these asset classes are going to do good. Meanwhile, the dollar is going to start to lose value at that point in time. The Fed knows this. This is why they've been holding off on this all this time. This is why they're so determined to continue with this policy that they have of raising rates and the quantitative tightening schedule. So what we're in a war here with the Fed. The Fed doesn't want to give us any money anymore. They're being stingy with their money, but the economy is starting to fall off a cliff because they're being stingy with the money. But if they're not stingy with the money, then the dollar's worthless. The dollar's really worthless anyway. Everybody's running into the dollar, but the dollar is only backed by the faith of. At this point, the dollar's practically decoupled from oil. I mean, the dollar used to be the reserve currency because it was coupled to oil ever since 1971. Ever since Kissinger went over there and made a deal with the OPEC countries. Kissinger made the deal with the OPEC countries, and the dollar was king dollar for all those years. China is snipping the ties to that. They're over there working feverishly to snip the ties to the petrodollar and undermine the petrodollar. They've been being successful. And so now the dollar is sort of decoupled from oil to a certain degree. It's more coupled to the dollar index and to the basket of currencies that makes up the SDR. You know? And if they ever try to release that SDR, it ain't going to work. It's just another fiat currency. You know, I mean, all these fiat currencies are all going to go down together with the destruction of the dollar. And this is because all the countries on earth are tightening together right now. They're tightening monetary policy. Means they got a stranglehold. They're not letting the money out. Okay? So what's happening is basically we're heading headfirst into this crisis now. I'm expecting maybe a little bounce on Monday, but in the new year, once we get into the new year and the markets are open again, I expect what's happening is the decline to continue in the markets generally overall. And the thing is I'm expecting actually a crash early in the new year. Now, I was expecting this crash actually to occur way back around September or something like that. But there was more liquidity in the system than I thought, and it took longer for that liquidity to start to actually dry up. The money sloshing around in the system. Because they created so much money all those years during quantitative easing. And they've stuffed it everywhere. Like, just, it's ridiculous. But it's really starting to dry up now, and we're starting to actually go headfirst into this crisis. So anyway, once we pass that green line, I'm expecting the Fed to react. Now, I don't know for sure when the Fed's going to react. That green line, I mean, I might have to readjust that. They might act early. They might act before the stock market gets down to 20,000. They might react right away. You know, and if they do, the dollar will start the process of dying. If they hang on and hang on tight, and they don't react, and they allow this to continue, the stock market's going to continue to decline until they do react. So, I mean, the whole thing is just set up for this. So, we'll see you guys on Monday with another market report. And thank you guys for listening. Like and subscribe, and we'll catch you guys later. Bye-bye for now.